It's certainly my pleasure to be a part of the IRA Club. We truly have a partnership. We've referred clients to the IRA Club, and but in talking with Ramez, we wanted to create a product that would appeal to those non-accredited investors. We felt like it only made sense and it would only be fair to create something that every person could have an opportunity to participate in. Um, I'm with Pioneer Realty Capital. We've been in business for now our 22nd year. We touch all phases of commercial real estate. We're owners of commercial real estate property. We've been lenders. We have been investors in commercial real estate. We have transacted and have been involved with probably $3 billion worth of commercial real estate assets or transactions. So we're very active and very experienced in the market, and we wanted to create a product that would be suitable to those non-accredited investors. And as we get into this, you'll see exactly what we've done to make something that's institutional quality available for all folks. Okay, so again, we are extremely excited to present something to you. I think you're going to find quite fascinating. PRC Equity Fund partners with Texas Public Universities in a public-private partnership, whereby in this partnership, the university signs a long-term lease, usually a 30-year lease, a master lease, that provides cash flow and income to the fund. And in exchange, we provide student housing to their students. So the student will lease through the university systems, generally their student affairs office for residential housing. And as an option, that student is going to have a property that's owned by PRC Equity Fund. And the rent is paid to us by the university. We don't collect rent from students, we collect rent from the university. The university pays us 6 months in advance, every 6 months, and then the student pays the university. And so, what I'm going to discuss with you is how the fund um, basically creates a pathway to making the development of these student housing projects available. And then how the fund benefits, and of course, as an investor in the fund, how you benefit. And so I'm going to probably share information that hopefully I can make it clear, but if I don't, then feel free to ask questions. The only dumb question is the one not asked. So please be generous and feel free to ask whatever questions that you may have. So talking about our offering, we were qualified to launch by the Securities and Exchange Commission on October the 4th. What's really interesting about that is we when we were contacted by the Securities and Exchange Commission on October the 3rd, they indicated to us that this was a non-review um, offering. In other words, they felt that our offering was so solid that it did not have to go through another level of review. And we started the process of our Reg A offering in August. We were qualified to issue securities on October the 4th, and that's almost never done. And so that speaks a lot to the strength of this investment opportunity. And what I think makes it strong is that as a fund, we partner with Texas Public University Systems, who represent what we call investment grade credit. In other words, when they sign a lease, that lease means something, and it certainly means something on the capital markets. We're able to take the value of that lease and then monetize that on the through the public securities such as the bond market or maybe even the stock market. So well, we were qualified to launch on October the 4th. Now, this investment opportunity we've designed to appeal to those individuals who need and want to build income for their retirement. We're raising $75 million. Each membership interest is priced at $1,000 a unit. And so there's 75,000 Class A membership interest. Now, what we are targeting, and you'll see why our targeted returns make sense as we go through this presentation, but what we are targeting is a 10% annual dividend that's distributed on a monthly basis. And you're going to see how we generate income to where we can target a 10% annual dividend that's paid out monthly. In addition to that, there's a profit split associated with this security. In other words, the fund is going to generate a profit each year. 10% part of that profit is going to fund the 10% dividend, but the remaining part of that profit 70% of that will be distributed out to our network of investors. The goal is to build real income for our investors. And as we go through this, you're going to see why it makes sense that we are building real income. But based on our projections that are based on our current pipeline, if you were to hold this security for 5 years, you could expect the following: 60% internal rate of return. Uh, Cash on cash return year over year ranging from 21% to 153%. If you were to hold this security for 5 years before selling it, then we estimate that you could perhaps receive a 4.92 multiple. So if you put a dollar in, then in 5 years, you'd be taking $4.92 out. And so that's what we our projections show that we're going to achieve. Now, the question is, how do we do that? How can we generate a 10% dividend that's going to be paid annually, distributed monthly? How are we going to be able to have a 70% profit split? Well, quite frankly, we're partnering with essentially the state of Texas through their Texas Public University systems. Now, in the state of Texas, there are six public university systems. Okay. Now, in a university system, there are multiple universities. For instance, in the Texas A&M University system, there are 11 universities. Okay. Now, that's important because the credit quality of a individual university in that system may not qualify as investment grade credit. And therefore, we may not be able to finance that credit on the bond market. But we partner with the university system, and that university system all generally have investment grade credit. And you're going to see why that's so important as we move through this presentation. So there's six university systems in the state of Texas, but there are 45 in those systems, 45 individual public universities, and they accommodate 1.4 million students. Now, there is a problem in the state of Texas. If you send your child or your young adult to a Texas public university, you're going to have a problem finding housing for those students, especially if that university is located in a small market. We refer to that as a tertiary market. Um, there's going to be limited housing on campus, but in those small markets, there's going to be almost no housing off campus. Now, the problem that creates is a long wait list for housing, high rental prices for off campus, a lack of affordable housing opportunities, and then some of the housing opportunities are just really aren't that good. And adequate maintenance, maybe some facilities had not been kept up with. So, how does the university continue to grow its student base when there's a lack of housing? Well, they could do it the old bureaucratic way and go through the university system and perhaps apply to get money appropriated to build more housing, but that takes a long time. In most cases, it's very difficult to have public funds allocated to build housing, especially off-campus housing. And usually those juniors and seniors and grad students, they don't want to live on campus. They want to live off campus. So how does the university make sure that there's housing available for those students who need to live off campus? Well, the way that happens is through a public-private partnership. The university provides a lease agreement with the developer, such as our PRC Equity Fund. And then with that agreement, we're able to monetize that lease through the bond market and generate enough cash to build a new facility that will be leased to the university. Remember, our lease is with the university, and the university leases to the students. As a result, we're able to more efficiently provide student housing to those students. Now, that's very, very important, especially in the state of Texas. I'll tell you why. If you haven't heard, a lot of people want to live in Texas. There's significant growth here in the state of Texas. And as a result, our student population at our public universities is growing to accommodate jobs, the demand for people to fill jobs, and really just to, to make sure that we're educating students for the future. Um, Most of these universities, especially in the Texas A&M system, are in tertiary markets, and you can see that it has significant population growth. Now, this public-private partnership arrangement is not new. This is something that's been around for a long time, and what they found is that there are many benefits to the university for engaging in a public-private partnership. It gives the university access to private capital. There's shared risk and responsibilities. The university gets to take advantage of an expert construction team as opposed to depending on its own staff. And then what's even more important, it offers balance sheet financing to the university. So it's a great method for the university to expand its offering of student housing. Now, for us, Pioneer Realty Capital, I'll quickly go through this because of time. Um, we have a live case study in our Prairie View A&M project. We acquired this property. We finished developing it in 2022. It's currently under a master lease agreement with Texas A&M University. We're in the process of doing our phase two on this project. It's interesting that when we opened this property in 2022, we opened 100% full. And then it was the following year in 2023 when Texas A&M came to us and said, "Hey, we want to master lease all of your available beds. And in addition to that, we want you to develop student housing at our other campuses as well." That's how great the demand is. That's how great the need is. And so I'm going to flip through this. You're able to download this investment deck if you go to our website. Now, let's talk a little bit about how the fund generates income. I'm going to give you an example, and then we'll come back to this presentation. Let me jump to another slide real quick. And to go through an example of how our fund generates income. So the fund provides what's called pursuit capital to the project. In other words, at the very beginning of this proposed project, we meet with the university. University tells us this is what their needs are, and from that point, we have to come up with a project to develop. Now, in coming up with that project, there are some costs that have to be figured out. I'll go through and show you here. I'm going to jump between slides here. So at the beginning of the project, we have to acquire land, we have to pay for third-party reports, design consultants, legal fees, and so forth. That's what we call pre-development costs, and what's required to fund the pre-development costs is what's called pursuit capital. Okay, in pursuit of a proposed master lease arrangement with that university. So the fund provides that pursuit capital. Now we're going to use an example here. Let's suppose that we have a $26 million project, but we need $3 million in pursuit capital to secure this project or to get it going. Now, before we spend any money, the university will sign a letter of intent agreeing to reimburse the fund in the event that this pursuit capital does not lead to a master lease agreement. So this money, let's call it $3 million, is invested in the project, and then to get to a master lease proposal, and then the university signs a master lease. Now we're able to monetize the value of that lease, the cash flow stream associated with the lease in a bond transaction. Now, in this example, we close a bond that's $36 million. Now, part of that $36 million repays the fund. So the fund invested $3 million, but from the bond proceeds, that money goes back to the fund at a 2x multiple. So it earns 100% profit. It invests $3 million into the project, it receives $6 million back into the fund. That's one of the ways that the fund generates a profit. Now, the remainder of the bond proceeds, in this case, that will leave $30 million, would fund the construction costs for the $26 million in construction costs. Then there's a remaining amount of money that's left from that project, and that money is then distributed back to the fund in the way of profit to the fund. So you can see how the fund is generating money. So really, the fund is providing bridge financing or bridge capital to the project until we close a bond transaction that repays the fund. So the fund, as you can see, is more transactional based. The more transactions that are done through the fund or performed by the fund, the more profit the fund generates. Now let's go back to our presentation and go through this some more. And of course, I'm hoping that you're having questions because this is a lot of information that we're sharing with you. So we talked about again, the four ways that the fund makes money. So it gets the repayment of that pursuit capital at a 2x multiple. It gets the net proceeds from the bond. So after we pay for the construction, whatever's left goes back into the fund. Then it collects rental income. The majority of that rental income, the rent that we collect from the university, pays the bond debt associated with the project. But there's about 10% left over, and that becomes rental income to the fund. And because we are required to keep cash balances in the fund, that's how we pay your dividends. Um, then those cash balances are kept in interest-bearing accounts. Um, so so that's how the fund generates income. Now, what does that mean for you? Now, based on our current pipeline of deals, the current pipeline that we have right now that are active, that are some at various levels of construction, um, based on those transactions, we are looking at in 2025 distributing $8 million in profits to our investors, in addition to the 10% dividend. That's based on what's currently in our pipeline right now. In 2026, you can see how those numbers grow because we're continuously adding more projects to the pipeline. And remember that the fund generates money by being that bridge capital to the project. So it generates the more transactions that are performed through the fund, the more money the fund generates. Okay, so we'll be generating profits and income from the fund on projects that maybe take 3 years to complete because we get the cash up front. When we close the bond transaction, we're receiving the value of that lease agreement up front. So the fund may make an investment into a project. Within 6 months, it's receiving its initial investment back at a 2x multiple. And then as we go through the process of finishing the project, that project starts to generate additional income in the way of rent and other income. So you'll notice that these are the numbers, this number here of units that we look at putting in our pipeline each year. Now, those numbers may seem large, but they're really not. If you consider that most of our projects are anywhere from 5 to 900 units, then this number only represents 2 or 3 projects a year in the pipeline. Now, keep in mind that we have 45 universities that we're taking care of. And so certainly we're not going to be servicing all of those universities. We're only putting 2 to 3 projects in the pipeline each year. But based on the projects we're putting in our pipeline, this is the type of income that we're generating because these are very, very large projects. And with the investment that we make, that initial investment, we're getting paid back at a 2x multiple. So we're able to generate significant revenue for our investors. And again, this investment deck is available for you to download so you can study in detail, and we'll be happy to go through it with you. Okay, so this is our current pipeline of projects. We actually have added to this. We have other projects that are coming on board. Some of these will be delivered by August 2026. Some in August 2027. I always say August because that's the beginning of the school year, and with our lease agreements we're signing with the universities, generally we have to have those beds ready by the time school starts. So, but this is what's in our stated pipeline so far. This is actually understated. I just want to show investors something. If you go to our website, if I can get it up here, PRC Equity Fund. A couple things. One, this is where you download the investment deck. Secondly, to really learn how your investment dollars are going to be treated, there's a video section that has a series of videos that go through the entire uh, fund, how the fund operates, the problem that we solve, how we solve the problem. There's a series that talks about municipal bonds, the initial public offering, so it's a very healthy library. There's also a link to the if you're not a current IRA, if you don't have a self-directed IRA, this talks about our partnership with the IRA Club and how you can open up an account with them. So that's on our website as well. Um, there's a number of articles, but it also has this invest now button, and that walks you through the whole process. And Ramez, it may be a little different process going through the IRA club, but essentially you'll end up here, which allows us to do all of our checks on you to make sure you're qualified to invest in this fund.
And
But
and, and
Ramez,
to and to your point, Charles, yes, it's slightly different because it is a different broker dealer. But the process itself when going through is very streamlined. That video actually does a very good job of showing how to make the investment. But even still, if you don't understand it and you reach out to their team members, right, with Pioneer Realty Capital, and let me actually show where to find you. So if you go to iraclub.com, like I said, the majority of you are current IRA Club clients. You're already well versed in self-directing. For those of you that just want to learn more that are new to the IRA Club, you go to iraclub.com, you go to Investors Row, you could click onto it right over here. You go to Pioneer Realty Capital. Did I just pass it? Where am I at? Right here, Pioneer Realty Capital. There we go. You're going to get a company overview, their website, their company logo, who they are. This webinar, by the way, and all webinars, once it's completed, will be added right over here once the recording will be available. And I already had a couple people ask questions. Will the recording be available? Yes, you will receive a follow-up email with the recording, details about the company, direct access to the team. So schedule a call with them right here if you have any questions, okay? The actual fund itself, this is where you could learn more about it, the Reg A offering, description, investment details, okay? Like he said, it's a $5,000 minimum. 75 million is the targeted goal. This is your rate of return. Monthly distributions. Somebody also asked earlier, what is the monthly distribution? I forgot to mention that to you, Charles.
Yeah, so we're targeting a 10% dividend that would be annual dividend that will be distributed on a monthly basis. So we actually escrow 10% of the funds that we receive in the investment. We maintain that escrow account through the profits that are generated by the fund. And then after all of our bills are paid, which includes that dividend, then whatever is left is divided and distributed to the investors. 70% to the investors, 30% to the managers of the fund.
Got it. That was actually another question that popped up is how does Pioneer Realty Capital get paid? So thank you for elaborating. And then, yes, I am a current IRA Club client. By executing this form, you've done your due diligence. We've not made any recommendations to you. You're doing this of your own free will because it is a self-directed retirement account straight into the landing page that Charles just showed you with a
When we first met Ramez, we were pushing our Reg D offering
Yep.
to present to your clients. And the reason why we went this route, which was a very expensive route,
Very.
to get a Reg A offering, is because of his recommendation, so that he can better serve his clients. So I want your audience to know that they have somebody advocating for them, advocating the fact that we're able to bring an institutional quality offering to folks who are not institutional investors. So the non-accredited investor gets an opportunity to invest in a product that's normally only available to accredited investors.
All right, Charles, buddy, it's always a pleasure, man. And thank you for your time, and we'll
Thank
touch
you.
base soon. Take care,
All right.
guys.
All right.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.